Okay, hello, my Life with Crypto brothers and sisters. Welcome to another Money Monday live training. I am excited to talk to you today about DeFi. I know I've been mentioning DeFi in many of my other trainings without really explaining what it is. I've talked to you on many different Money Monday trainings. So today I thought I would take the time to just start the conversation about what is DeFi. And I think on next Monday's training, I'm going to go into it even just a little bit more detail. So let's start with the definition of what is DeFi. DeFi is a collective term for financial products and services accessible to anyone on the internet via blockchain applications. DeFi applications are run by smart contracts. The very first smart contract blockchain was Ethereum. And now there are over 100 blockchains that support smart contracts and other DeFi applications. Some of them include Arbitrum, Avalanche, Polygon, Phantom, Cardano, Solana, and many more. Smart contracts are often called programmable money. The code is publicly available so anyone with proper knowledge can review it. And I want to now look at traditional versus decentralized finance so you can get an idea of how they're similar and how they're different. I also posted a video on the Facebook group and I pinned it to the top so you can find it easily. It's a 2-minute video and it is a really good short video that describes DeFi. I highly recommend that you go check it out. Okay, traditional or TradFi financial products and services typically include TradFi banking products and services. And those are, as we all know, are checking and savings accounts, mortgages, loans, credit cards, wire transfers, money market accounts, and certificate of deposits. Those are just some of the typical banking products and services in the TradFi world. Other TradFi products and services are investment products and services, and those include things like the stock market, the bond market, the Forex market, online brokers or robo advisors. There's lots and lots of different investment products and services available in TradFi, but these are the main ones I think we're all familiar with. And other TradFi products and services include insurance products and tax and accounting services. So what about decentralized or DeFi products and services? Okay, on the banking side, we have things like stablecoins. So in the DeFi world, you can't use the US dollar, but you can use USDC, which is a collateralized stablecoin based or pegged to the US dollar. It was created by Circle and Coinbase. And in the US, it is the most popular. Another stablecoin very popular around the world is USDT. Other banking products are personal or self-custody wallets. You manage your own money in a personal self-custody wallet. There's also something called custodial wallets, and they're similar to TradFi bank accounts. These are corporations or businesses that control your crypto. Usually they are centralized exchanges, meaning a corporation manages your money. For example, Coinbase or Kraken or KuCoin, Bittrex, there's lots of them. Those are all centralized exchanges. But of those that I just mentioned, Coinbase is the most like a centralized bank. They're becoming more and more the new world bank, if you will, not sort of like a 21st century bank because they support DeFi, they support crypto, but they also support bringing in USD so that you can buy stuff with your US dollars. So you can turn your crypto into US dollars and transfer it back out to your bank account. So anyway, those are some typical DeFi banking products and services. Another one is loans. Of course, we all know you can borrow, and lending and borrowing is a big part of TradFi. Well, it's also a big part of DeFi, and I'll talk more about that in just a little bit. Some more DeFi products and services are investment products and services, just like in the TradFi world. In DeFi, we have centralized exchanges. We call them CEXs, C-E-X, or a decentralized exchange we call a DEX. And those, of course, are for crypto. A centralized exchange would be your Coinbase, your Kraken, your Bittrex, your KuCoin. And those are places where you would have custodial wallets, meaning they control your money while it's on their exchange. Decentralized exchanges, or DEXs, are where you would use your personal self-custody wallet to connect to the decentralized exchange. And you are 100% in control of your money the entire time. And that's a good thing and a bad thing. It can put a lot of stress to make sure that you don't make any mistakes. But anyway, DEX is another investment product. Proof of staking is another investment product in DeFi, and it's kind of like a certificate of deposit. After staking some crypto on a proof of stake blockchain, you earn interest, also known as rewards. Another investment product is a liquidity provider. This is when someone who owns crypto might provide their crypto on a DEX. You deposit it onto a DEX to provide liquidity to the DEX, meaning you provide your tokens for somebody else to buy if they want to. And in providing your liquidity, you earn rewards or interest, however you like to look at it. Some other DeFi products and services are individuals. Let's see, we're talking about liquidity provider. This is an extension of the liquidity provider. It's how it works on DEX. And like I just said, individuals like you and I deposit our cryptos to the DEX, and we receive interest, also known as rewards, for providing the liquidity to trading markets for other people to trade. Other type of DeFi is yield farming. And that's a collective term referring to crypto holders maximizing rewards across various DeFi platforms, from lending, borrowing, or staking crypto coins. It's sometimes called yield optimization. And of course, you may know, if you've been listening to me for a while, that I'm a big fan of yield farming. And I do indeed do that, and I'm doing it right now until the next bull market. And when the next bull market rolls around, then I'll go back and do some more trading. So let's talk about some other products and services available in DeFi, similar to TradFi, and that's insurance. DeFi insurance coverage against black swan events or other losses caused by events in the DeFi industry are available right now. DeFi insurance coverage is available for things like exchange hacks, DeFi protocol attacks, smart contract failures, stablecoin price depegging. And I wish I could say that in crypto and DeFi and blockchain that, all is well and there's never anything that goes wrong. But unfortunately, sometimes things do go wrong. And it's not a bad idea to have some insurance. I don't personally use it in DeFi, but it's available if it's something that you would like to have it while you're playing in the DeFi world. So why use DeFi? Well, one of the reasons that you hear all the time over and over is accessibility. Many people, especially around the world, can't get a bank account, but they can use crypto if they have internet and a telephone. It's basically all you need, a smartphone. Increased transparency and security is a big thing about blockchain and DeFi. But one of the things you don't necessarily hear a lot is that all that transparency gives you less privacy. Now, your personal identity is not known unless, somebody goes out and puts two and two together. If they figure out your wallet address and they connect it somehow to you across social media, or somehow they could figure out who you are. So it is definitely transparent. It's not obvious who owns what wallet. But some people would like to actually not have their wallets seen. That's not something that will happen in blockchain right now or DeFi. Someday, I think they're working on it. Low fees on transactions. Okay, I said sometimes, because the more blockchains, especially Ethereum, gets used, the more transactions that are happening, the more the fees cost. And Ethereum, unfortunately, is the highest cost blockchain out there that uses smart contracts, which of course is why Arbitrum and Avalanche and all these other Ethereum compatible blockchains were created, because they are layer twos. They function differently, I'll say, and they reduce the fees greatly, which is wonderful. But sometimes you can't avoid doing something on the Ethereum blockchain, and sometimes the fees are pretty high, but only sometimes when traffic is heavy. Most of the time, they're reasonable. High interest rates on investments is a yes. You can definitely earn much higher interest rates on investments in DeFi than you can in the TradFi world. And that's one of the things that have drawn a lot of people to crypto early on, is early investors, early adopters of a technology take advantage of these differences in what's traditional high interest rates, for example, but we also take on a lot of the risk. And that's part of getting into a technology early. And I would say we are still very early into blockchain. It is still being developed. DeFi is still being developed. So don't give up on it. If it seems too scary for you right now, don't give up on it. It will get easier and easier. And if you're someone who's ready to learn right now, I'm here to help you. So another use of why use DeFi is functional autonomy. And that's a fancy way of saying DeFi platforms don't rely on centralized institutions. And hopefully most of you know this, because those centralized institutions could go bankrupt or they could close your accounts for no reason. And we're seeing a lot of this right now. A lot of banks are struggling around the world. And I think that that's going to cause crypto and blockchain and DeFi to get more and more popular. So what are some of the challenges of DeFi? Some of the challenges are poor performance. Blockchains tend to be slow. Now, it's faster than if you had to send money across the world and you went through your bank. That can take days to happen. So it's all relative. When I say blockchains are slow, I mean it can take minutes instead of seconds sometimes. And if you compare that to traditional finance and banks, it's quite fast. But those of us who've been in crypto for a while, we can get a little impatient wanting it to speed up a little bit. And that's why layer 2s were created, because they also tend to be faster. And layer 2s are things like Arbitrum. That's a big one. And Optimism. That's another big layer 2 for Ethereum. Another DeFi challenge is high risk of user error. Because blockchain is still in the development stages, the user interface and the user experience can be challenging. And it can be high risk for people who aren't used to the technology, which is why people like me come in here and want to teach you. We want to show you to help you reduce any risks of error. I mean, I've made lots of errors in learning this over the years. So why not, piggyback on what I've learned and avoid yourself making those errors? So consider that. And pay lots of attention to all the trainings that we have in our Facebook group. Another challenge, like I just mentioned, is bad user experience. Some of the blockchains are not super easy to use. Some of the blockchain applications, I should say, are not super easy to use. They're getting easier and easier for me because I've been doing it for several years now. But for somebody who just steps into it, I can see how it could be confusing or sometimes a little bit overwhelming. And another challenge is a cluttered ecosystem. And what that means is there's just so many different places to exchange. There's so many different places to bridge. There's so many different places to yield farm that it's a bit cluttered sometimes. You don't know the best one to use. And that's another reason to pay attention and listen to somebody who's been in the system for a while. I've tried lots and lots of different ones of these things I just mentioned, and I can guide you into what I think is the best ones or the easiest ones to use. So let's move on now to DeFi risks. So DeFi, like any blockchain, has risks involved, and DeFi especially because DeFi uses smart contracts. So here's a list of some of the main risks in DeFi. Counterparty risk. If you take part in crypto loans or any other debt lending or any other lending in DeFi, you're at risk of the counterparty not repaying their debt. That's called counterparty risk. Regulatory risk. If a smart contract gets shut down due to regulatory problems, your funds could be at risk. Token risk. Crypto assets may have different levels of risk based on liquidity, trustworthiness, and smart contract security, as well as the project and the team. Because the DeFi space has many low market cap cryptos, token risk can be exceptionally high. Remember, there's something like, I can't keep track of it, there's something like 20,000 different cryptocurrencies out there. And because there's so many of them, those low market cap ones, all the ones that are way down at the bottom of that list, are very, very high risk. And that's why I tell people, stick with the top 250 or so if you really want to expand your portfolio and get into altcoins, stick with the top 250 or thereabouts, and you'll be safer. Software risk is another vulnerability. Code vulnerabilities could undermine the security of smart contracts running on a blockchain. And that's just, the nature of code. When you write code, there's always a chance of errors. And smart contracts are just code that is put on the blockchain. Something else that you may not have heard of, and I'm just going to introduce the concept here, is impermanent loss. So if you're staking your crypto coins or your crypto assets into liquidity pools, impermanent loss may cause a position to lose money. And I'm not going to go into impermanent loss any more than that in this training, but I'll talk about it at some point in the future. So that's that is my spiel today for what is DeFi. And if you get a little bit nervous about some of the things that I said, I just want to point out to you in this screenshot that I took, this is one of the platforms that I really like and that I currently use. It's called Radiant Capital. And this is showing you some of the potential interest that you could earn right here on this platform. And how you read this is this first column. See if you can see there we go. This first column is how much you would earn if you were depositing your tokens, your crypto coins. So if you were to deposit USDT or deposit Ethereum, for USDT, you would earn 9.46% in Radiant tokens. And you would also get 2.38% of the platform fees generated by other people using the platform. And if you were to deposit Ether, you would earn 12.82% on Radiant tokens, and you would earn 1.54% on the platform fees. Now, if you decide to borrow, if you make a deposit Ether or USDT and borrow against it, you're going to get paid even more tokens, if you can believe that. You'll pay 15.16% if you borrow. There's always a charge for borrowing money. There's always an interest rate. The interest rate for borrowing USDT on Radiant Capital is 15.16%, but you get paid 26.95% in Radiant tokens. And with Ether, you're going to get paid 23.13% if you borrow against your Ether that you deposit, but you're going to have to pay 11.71%. So if you subtract these two, you'll get your actual returns if you actually borrow. So is depositing tokens a taxable event? Very good question, Rita. No, depositing tokens, I think by itself is not a taxable event. Once you start earning tokens, the IRS does say that your earned tokens are income, and you do have to report that as income on your tax return. And it would be the fair market value at the moment you receive them. Because, if you don't have any Radiant tokens and you make a deposit and start earning some, all of a sudden you're going to start getting Radiant tokens in your wallet. You didn't pay anything for them, but your cost basis would be the fair market value at the time you receive them. And that would also have to be, I believe it's ordinary income on your tax return. And then when you sell those tokens, unfortunately, you then also have to pay capital gains taxes. So I hope that helps today. If anyone doesn't have any questions for me at the moment, then I'm going to say that is the end of today's training. I'm always available to answer questions in the Facebook group, or you can always private message me through Facebook Messenger. And if you have an idea of a training that you'd like me to do, I'm more than happy to do that. Probably next Monday, I'm going to continue this discussion on DeFi, and I'm going to talk a little bit more about specific DeFi strategies so that we can all learn a little bit more of the ways you can make money in DeFi. So that's all I have for you for now. Take care. I'll see you all next Monday. Bye-bye.